Consumer confidence edges up on falling fuel costs. The Conference Board reports consumer confidence ticked higher this month as lower gasoline and grocery prices gave households a brief reprieve. Consumer confidence rose 2 points to 97.2, modest but meaningful against a backdrop of stubborn inflation. The Present Situation Index increased by 1.5 points, reflecting better views on current business conditions and job availability. However, the expectations sub-index fell by zero point 0.8 points, indicating lingering doubts about wage growth and future price pressures. Breakdown of key drivers. Gasoline prices are down 12% from their spring peak, thanks to eased OPEC production cuts and mild summer demand. Grocery inflation slowed to 3.2% year over year, the slowest rate in 14 months, aided by bumper fruit and vegetable harvests. Housing costs remain elevated, with the shelter component still up 6.1% year over year, keeping overall CPI near 2.9%. Wages rose by 0.3% last month for a 3.2% annual gain, below the 3.5% threshold many economists see as necessary to sustain confidence. After a run of 5 consecutive monthly declines, sentiment's slight recovery suggests households are taking advantage of temporary relief. But economists caution that one-off price lulls may not translate into sustained spending increases, especially if rent hikes and higher borrowing costs bite deeper. What to watch next? The payroll report on Friday will test whether labor market resilience matches price fall optimism. PCE inflation, the Fed-preferred gauge due next week, could temper hopes for early rate cuts if any upside surprise occurs. Retail sales could indicate holiday season planning, with any weakness prompting caution among merchants and Fed officials alike. Drivers have more breathing room at the pump and in the grocery aisle, but true confidence hinges on steady paychecks and manageable housing costs, Dr. Gina Bolvin said with an analytical tone. She added, "If those fundamentals don't improve, this bump in sentiment risks being fleeting." Retail chains and automakers issuing guidance now must decide if they'll bank on stronger consumer spending through year-end or brace for a reversion to trendline growth. Credit card delinquencies remain near historic lows, but Asian and European-style household savings buffers aren't as robust in the U.S., leaving spending susceptible to shocks.